Welcome back to Market on Close. Time for Options Corner. Kevin Green, senior markets contributor, is here. Kevin, thanks so much for joining us. And I thought we were going to have some good news to talk about, at least based on this morning's action. But the S&P just falling apart now, down 1.6%, every sector in the red. What levels are you looking at going into the close?
Yeah, Caroline, obviously we started off really strong here today. We had around almost 96% of the stocks in the S&P 500 in the green this morning, but you did start to see it fade here a little bit. And actually this morning we kind of highlighted two areas of focus here. The 5250 area was kind of our intermediate area of resistance. We did break through it, but once again, we just were not able to kind of close above that level. And then we started seeing a fade. And a lot of this fade that we are seeing is not only just news driven, but something that really does happen in these type of erratic markets. We have very low liquidity, price can change on a dime. And if you don't really have enough buyers in place or just sellers in place to really try to backstop some of the trends, it can become a little bit difficult. And that's really what we're seeing. But we're testing that 5,000 level right now, sitting at about 49.75, getting close to getting outside of that band here. And if we do see a little bit more of a sell-off here, I'm not sure if we're going to get to that 4,800 that we talked about earlier this morning, but it could get fairly ugly into the close, knowing that we have some potential overnight risk taking place here. So kind of looking at the levels just on an intraday basis, once again, 5,000, anything below that might be a little bit of an issue. And if we do see a little bit of a bounce or the market on close order is actually really aggressive to the buy side, meaning that we have these short sellers in the market that are really trying to potentially cover their positions or what have you. And if we do get a little bit of a rally, I'm looking at 50-50 as that area for us to try to hit. But right now, the trend looks like it's to the downside. You would hope to be able to recover at least to that 5,000 level. But as I kind of talked about earlier this morning, we just had a situation. This is the E-mini S&P 500 chart. You just had a situation where we had a really nice grind in the morning, but you started seeing volume starting to tick down just a tad bit, even on up candles. Then we had a reversal candle, and we had this bearish divergence on the RSI, basically RSI making a lower low. And then that's where you kind of saw this market kind of start to flush to the downside. And now we're at aggressive oversold levels here. So it's an unfortunate situation, but this is exactly what happens. And I don't even want to call it a bear market yet, but this is exactly what happens when we have these type of corrections. A lot of false signals, both to the upside and downside. And unfortunately, this is what we call a bear trap today, or bull trap today. This is where a lot of long buyers that got in early on kind of got caught off guard here. And that's probably why you're seeing aggressive selling to the downside.
All right, a bull trap in an S&P 500 that's now down 19.3% from the highs. So very close to that bear market territory. You talked about the overnight risk, Kevin. Obviously, there's this midnight deadline for President Trump's tariffs set to go into effect, 104% on China. Seems to be holding firm, even though there's negotiations happening with more than 70 countries, according to reports. Do you think it's going to be a crazy overnight session as well?
The only one that really matters right now, Caroline, is China. You could talk about 50 countries and 60 countries. No, I mean, yeah, they're going to have a little bit of an impact, but no one really cares about, and sorry for this, no one cares about if we are able to create a trade surplus with Cambodia or anything. No one, you really need to have the EU as a conglomerate, a trade deal there. You need to have Japan, which seems like that's probably the most likely one to finish first. And then you need to have China. And you can say all you want when it comes to the rhetoric, but China is a major trading partner with us, especially when you're looking at retail goods. You can even take the manufacturing and industrial side out of it. Just the retail space itself is going to have a meaningful impact here. And so the market, even though we had an elevated VIX at around a 40, 45 VIX earlier today, it seems like we were kind of discounting the China exposure. And I think that's probably what the market's also fearful of right now, is that we will see 104% tariffs on China immediately. That is going to have a massive impact when it comes to the economy, not only here in the United States, but around the world here. So that's something to really try to be mindful of. And I do believe that we will see some fireworks here overnight when it comes to that. Now, maybe they do make a deal. Maybe they do pause these tariffs. Who knows? We've seen crazier things happen in the past here. But if we do not see any type of resolution as we start tomorrow morning, and if we do see retaliation from China overnight, that's where it gets a little bit more interesting to the downside here for the S&P 500.
Okay, and what levels would we be looking at there? Because I do want to remind you, you said we're closer to the end of this than we are to more losses, I thought.
Yeah, closer to the end means 60% of the way there. I mean, you still got 40% of the way to the downside here. I'm looking at 46, around 46.50. Seems like a decent value area if we do not get a credit event that creeps up into the market. You start seeing a lack of liquidity within the credit markets. I think all bets are off there, Caroline. That's where you have more drawn out bear markets. But if we don't have that type of an event, 46.60, 46.80-ish, that 50-month moving average on the SPX, I think is actually a really key area that we have seen some buyers really step in the past when we have corrections or even bear markets. Now, that's what I would look for. I'm not saying that's an overnight level by any means, but that's kind of the longer term technical setup that I'm kind of being mindful of right now.
All right, 46.80, long way from where we are right now. Kevin, final thoughts as we head into the close? Still have about 22 minutes before that bell rings.
Yeah, I would just say if you're a trader, you got to be I continue to say, be very tactical here, right? If you're going to find areas to buy into, nibble just a little bit. You don't have to deploy all of your capital. You don't have to call a bottom here, especially if you're a long-term investor. And you're going to have to be able to change on a dime as the dynamics change. And unfortunately, we're probably going to live with this type of news flow for the next 3 to 4 years, Caroline. And so if that's going to be the case, we can't get married to one ideology, and don't let politics cloud your judgment. I think that's another thing as well. You can have as much support for somebody or against somebody as much as you want, but let the charts speak for themselves, let the fundamentals speak for themselves, because that's how we make money in this market.
All right, is Dramamine publicly traded? I think we need to invest in that. Kevin Green, thanks so much.